all based on a tone out of Washington, a more conciliatory tone, the fiscal cliff. Now there's no question that this is a giant question mark and a huge issue for the stock market. And today's performance simply gives us the positive side of the equation that if in fact they can come to some kind of political agreement on this fiscal cliff, it should have a positive impact on the market. But at this point, it's only rhetoric, and the rhetoric can turn sour as easily as you and we are all having this conversation. So I think you have to still be very cautious, but I also think that the next 5 or 6 weeks of the year are going to create very, very interesting markets. And that doesn't necessarily mean it'll be positive. It could be quite negative. But I do think that if it is negative, it's going to create perhaps some very interesting short-term buying opportunities as we go into the new year. So I wouldn't be discouraged if the market gets weak again. I would actually view it as perhaps an opportunity to buy some relatively cheap stock in some very good companies.
Do you have any specific sectors you are focusing on? Or?
Sectors? Well, it's always the same sectors. We think energy should be part of everybody's portfolio. We have some exposure to the housing market, but only through lumber companies, because we view lumber as an asset and ultimately a good inflation hedge. And we own some of the chemicals. We own some of the big rails. Pretty much the same stocks that we've always owned. We have some exposure to the insurance sector, which has been acting better. We've had exposure to big money center banks, but that hasn't been a very successful area to be in for a number of years. No, so for us, it's pretty much the same old, if you will. But what we will do is we will use any short-term market weakness to perhaps add to some of those positions.
But why do you think it will fall?
Well, it's I don't have a crystal ball, but I think we're a long way from the resolution of the fiscal cliff, number one, and I think it's critical that it gets resolved. And number two, there is we're going to see a lot of our taxes go up next year, no matter what, and one of which will be the long-term capital gains tax. We've had the same tax rates for 10 years. There are a lot of folks that have a lot of capital gains, probably runs into the hundreds of billions of dollars, and a lot of this stock potentially could be for sale between now and the end of the year as people lock in these long-term profits, the long-term capital gains taxes at current rates before those rates go up in 2013.